Next week will be a very interesting week for the US dollar because there will be 4 key data releasing which will influence the next rate cut, and it will influence the market pretty significantly. Starting from Thursday, the CPI data, which is really crucial amongst the others, is really watched by Federal Reserve. And this is why. Because CPI is the measure of inflation from the consumer side. And as you know, the Federal Reserve has 2 mandates. The first one, controlling inflation. The second one, full employment. So to measure where the inflation side of the equation is, they will watch this data very closely. There will be 2 scenarios for this data release. Is better than expected or worse than expected? And I will explain it to you right now. If the CPI is higher or hot, it will show some inflationary pressure, making the next Fed rate cut less probable, which makes the dollar stronger against every currency in the market. But if the CPI is cooler than expected, the next September is going to be a major rate cut, making the USD weaker across all the major pairs, even gold, for example. If it came as expected on Thursday, it will still consider to be higher inflationary environment, which makes the USD very strong against its pairs. The next one is going to be PPI. Although it also gauges the inflation from the producer side, the CPI is very crucial at the market sentiment that we are expecting on this market side. And next to PPI, there will be unemployment claims, which is a weekly report showing how many people claim for unemployment benefits. And as we know, the labor market is very weakening and showing some cracks, which the Federal Reserve is waiting to see whether to cut interest rate to help that the crack, or just wait and see to not re-accelerate the inflation. The next one is retail sales. So if there is a weaker sentiment on retail sales, also on Friday there will be a consumer sentiment. This will show how strong the consumer is on the market. This significantly will affect dollar in positive or negative way. Stronger spending, which boosts the currency. Strong spending equals to good for currency. Bad spending equals to bad for currency. To generalize it all, Tuesday's CPI data is crucial amongst all of them. If CPI is cool and low, the next Fed cut will be high probability, which makes the dollar weaken against major pairs, even gold. But if the CPI data came as expected or higher than expected, it will show inflationary pressure, which makes the dollar even stronger against all the pairs and even stronger against gold. Tuesday's data will be very crucial to your analysis. And if you got any type of question, please do let me know in comments and I will do my best to answer those questions. And please do considering subscribing, liking and sharing this. It will be a lot to me. And thank you. See you next week.